Welcome back to the deep dive on the Malaysia Money Matters show. It's the 24th of July, 2025.
Great to be here. Lots happening again.
Absolutely. Today, we're diving into the financial news that's really shaping things, starting right here at home with Malaysian companies. Then we'll look outwards internationally, politically, and really try to unpack what it all means for you.
Sounds good. It's all connected, isn't it? The local and the global picture.
Exactly. So let's kick off locally. First up, AME Real Estate Investment Trust. They've reported quite a strong quarter.
An 11.5% increase in net property income for Q1 FY 2026.
Yeah, and that's driven by new properties they've bought and higher rents they're getting.
Right. And their distributable income, the money that actually could go back to investors, that's up too by 7.1%.
So what's the takeaway there? Good signs for the industrial property market.
I'd say so. It shows solid performance, strategic growth. It kind of underlines that whole logistics and industrial hub narrative for Malaysia. Positive for investors in that space, definitely.
Okay. Sticking with property trusts, Capitaland Malaysia Trust, they raised RM 250 million.
Yeah, through a private placement. And apparently it was oversubscribed, which is always a good sign. Lots of interest.
So they sold new units to specific investors. What are they doing with the cash?
Mainly paying down debt.
Yeah.
Specifically, bank borrowings they took on for some recent industrial and logistics asset buys. Assets that are already, bringing in income.
Ah, okay. So strengthening the balance sheet.
Precisely. It cleans things up, optimizes their financing, gives them more flexibility down the road. Smart move, really. Prudent.
Right. Now, on the flip side, some tougher news from Infomina.
Yes. Their first quarterly loss since they listed, I believe.
That's right. A net loss of about RM 3.14 million in their fourth quarter.
And the main reason seems to be this one-off provision, around RM 10 million set aside for doubtful debts.
Yeah, related to a customer over in the Philippines.
So while it's a setback, you have to see it in context. They're calling it a one-off, and they still seem optimistic, especially about their expansion into Japan.
So diversification is key for them.
It has to be, yeah, especially in tech services. Don't put all your eggs in one basket, as they say.
Okay, let's talk about energy. Northern Solar is making a big move.
They're pushing into utility-scale solar. So think large solar farms, not just panels on your roof.
Right. What's driving that shift?
Well, a big factor is the recent power tariff reforms. Electricity costs are going up for the really heavy users, like data centers.
Ah, so large-scale solar becomes a much more attractive, cost-effective option for those big consumers.
Exactly. Northern Solar is basically positioning itself right where the market and the policy are heading. Could mean some pretty substantial projects for them down the line. Good for Malaysia's renewable energy targets, too.
And speaking of data centers, the investment numbers are pretty staggering.
They really are. RM 144.4 billion in approved investments between 2021 and March this year. Huge numbers.
And that's expected to create, what, about 1,400 new jobs?
Yeah, 1,429 specifically. Now, that number might sound small compared to the billions invested.
But the type of jobs matters.
Absolutely. These are high-skilled, high-income jobs. We're talking about boosting Malaysia's digital autonomy, attracting tech talent. It's about quality, not just quantity. A real upgrade for the workforce.
Gotcha. Okay, let's shift to things impacting the cost of living directly. Toll hikes.
Right, the government stepping in. The Ministry of Finance is covering over RM 500 million in compensation.
To the highway companies.
Yes, to the concessionaires, so that they keep the current toll rates frozen at 10 major expressways for this year.
That's direct relief for commuters, then.
Oh, definitely. Affects almost 1 million people daily, apparently. Helps keep those essential travel costs down, which everyone feels. Of course, there's the longer-term question of how sustainable that is, but for now, it's direct help.
And on electricity tariffs, there's a new mechanism.
Yes, an automatic fuel adjustment mechanism. They'll be adjusting things monthly now, based on fuel costs.
Monthly. Does that mean bills will be bouncing around wildly?
Well, the Deputy PM gave assurances. They say welfare will be protected, minimal impact on most domestic users. Apparently, 85% of households will still be shielded, with incentives for certain usage levels.
So the idea is to smooth out the big shocks from fuel price spikes, but also maybe encourage people to save energy.
That seems to be the aim. Protect consumers, but also nudge towards efficiency. It's a tricky balance.
Okay, let's broaden the lens now. International and political news impacting us here. Big one for motorists. RO95 petrol price.
Yes. The PM announced it's going down to RM 1.99 per liter.
But only for eligible motorists, right? More details coming later.
That's the key. Is part of the subsidy retargeting plan. We should know more by the end of September who exactly qualifies, and how it works.
So immediate savings for potentially 18 million drivers, but it's the start of a bigger shift in subsidies.
Exactly. Good for the wallet now for many, but rating agencies are watching how quickly the broader subsidy rationalization happens. It's about optimizing government spending.
Okay. What about the overall economic picture, GDP forecasts?
Yeah, the Asian +3 Macroeconomic Research Office, AMRO, they've trimmed Malaysia's growth forecast a bit.
How much?
For 2025, down to 4.2% from 4.7%, and for 2026, down to 3.8% from 4.5%.
Why the downgrade?
Mainly global headwinds, rising uncertainties, especially around U.S. tariffs, and just a general slowdown in global demand, things happening outside Malaysia, basically.
So external factors are weighing things down, but how does Malaysia look overall?
Still relatively healthy, actually. Domestic demand is holding up. Plus, the central bank acted preemptively with that interest rate cut, and the ringgit being stronger helps provide a buffer. So caution, yes, but not alarm bells.
Interesting. Now, something fascinating happening in the bond markets.
Oh yeah, the Asian local currency bonds. Record sales.
How much are we talking?
U.S. $1.5 trillion so far this year, issued by companies and non-sovereign entities across Asia-Pacific in their own currencies.
Wow. Why the surge?
A big driver seems to be investors wanting to diversify away from the U.S. dollar, partly influenced by uncertainty around U.S. trade policies, particularly with President Trump.
So a move towards perceived stability in Asian economies. De-dollarization in action.
Pretty much. It shows growing confidence in local Asian markets and a significant shift in how global capital is flowing. Quite a statement.
Speaking of trade tensions, the EU and the U.S. seem to be heading for a clash.
Yeah, it's escalating. The EU's prepping a massive $100 billion counter-tariff plan.
A counterplan to what?
To the U.S. threatening 30% tariffs on EU goods. If there's no deal and the U.S. goes ahead after August 1st, the EU says they'll hit back with 30% levies on U.S. goods.
Goodness. That sounds like a serious trade dispute brewing.
It really is. We're talking major economic blocs potentially imposing large-scale tariffs on each other. The big worry for you, for businesses, is the impact on global supply chains, stability.
Yeah.
It just ramps up the uncertainty everywhere.
And finally, more trade friction, this time involving China and the EU.
Right. A German Economic Institute study is alleging China is keeping its currency, the yuan, artificially weak against the euro.
Why would they do that?
Well, the allegation is it makes Chinese goods cheaper in Europe, hurting European industries, contributing to deindustrialization there.
So accusations of currency manipulation adding fuel to the fire?
Exactly. It amps up the tension over fair competition just as EU-China summits are coming up. Highlights these really deep-seated issues in global trade that aren't going away.
So putting it all together, quite a complex picture. Local moves to ease costs, huge investments in tech, but also these global trade winds blowing quite hard.
It really is a mix. Domestic resilience is key, but you can't ignore the international pressures. Understanding how they interact is crucial for making sense of it all.
Absolutely, and that's what we try to do here, to make sure you stay informed and understand the connections.
So you can navigate things better for your own finances.
Precisely. Make sure you subscribe to the Malaysia Money Matters podcast to keep getting these deep dives into the news that really impacts you. We'll catch you on the next one.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.